crypto pricing continues to start behaving slightly differently than stocks, bonds, fiat, and almost every other asset class. Have we finally decoupled for good? Or is there still some maturation necessary beforehand? Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Every Sunday we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. Be sure to check out our sponsors, Unstoppable Domains, Proton, and Masterworks. Secure your unique human-readable crypto domain, like Casey.wallet, for your personal or business brands today with Unstoppable Domains. Protect your core account privacy with Proton's Swiss-based encrypted email, file storage, calendar, and VPN, and diversify your investment strategy by adding art to your long-term portfolio with Masterworks. Awesome. Let's hit Crypto This Week. U.S. regulatory agencies that have influence over the future of crypto are going through some well overdue checks and balances soon that could bode well for us. Agency power is under threat in U.S. Supreme Court, FTC, and SEC cases. Two cases that give the U.S. Supreme Court's conservative majority another opportunity to restrain the power of federal agencies go before the justices next week in disputes involving the Federal Trade Commission and Securities and Exchange Commission. The SEC, who has been especially dragging their feet with providing regulatory clarity to the crypto space, is getting some well overdue heat as well. U.S. senators question SEC why its staff is quitting at highest pace in 10 years. 6 U.S. senators have questioned the Securities and Exchange Commission, SEC, why its staff is quitting at a record pace. Efforts to ram through hurried rulemaking without proper analysis, deliberation, or consideration of downstream negative impacts is nothing short of regulatory malpractice, the lawmakers told SEC Chair Gary Gensler. Recent reports suggest that SEC officials are using off-channel communication platforms such as Signal, WhatsApp, Teams, and Zoom for official business and without producing these records in response to open record requests. Chair Gensler's regime at the SEC has been characterized by regulatory hypocrisy and inconsistency. Unacceptable that Gary Gensler doesn't hold himself to the same transparency standards he places on the private sector. And based on some information I learned at the Forbes Iconoclast conference in New York this week, this is bullish as one of the main themes of the next US presidential elections will be crypto, and many believe that most, if not all, of the candidates will be pro-crypto. If you'd like to see a video summary of other global financial information that was discussed at the conference, please let me know in the comments below. The day we have all been waiting for has come and passed, bringing with it another pretty predictable 75 basis point rate hike from the Feds, sending interest rates to the highest point in 15 years. And other countries are following suit, as the ECB, or European Central Bank, raises interest rates again to its highest level since 2009 and cuts bank subsidies. Also, the Bank of England sets biggest rate hike in 33 years and warns of a long recession. And Philippines Central Bank is set to match Fed's 75 basis point rate hike on November 17th. Another monthly report that affects the Fed's decisions on monetary policy, a mixed bag for the jobs report. Employers keep hiring, but unemployment rises. The bottom line here is that the labor market is softening, but has not yet reached the point where the data are screaming at the Fed to stop tightening, said Ian Shepardson, chief economist for Pantheon Macroeconomics. But if these trends continue as we expect, markets will start to push the Fed, and especially Chair Powell, to rethink the idea of continued hikes next year. So, in the meantime, while the global markets slowly bleed out, another concern continues looming, as the Fed warns of low market liquidity in $24 trillion treasury market in the latest financial stability report. Liquidity metrics such as market depth suggest that treasury market liquidity has remained below historical norms, the Fed said Friday in its latest financial stability report. Low liquidity amplifies the volatility of asset prices and may ultimately impair market functioning. And interestingly enough, against all odds over the past few weeks, Bitcoin is now less volatile than the S&P 500 and NASDAQ. A rare 2% daily loss for the US dollar index gives Bitcoin and stocks an opportunity for gains, but Bitcoin still undercuts the rest on volatility. Bitcoin held gains above $21,000 into November 5th as the US dollar posted a rare major daily decline. The last time volatility was this low, Bitcoin rose from $9,000 to $60,000 in less than 1 year. Bitcoin's 30-day realized volatility is nearly equivalent to that of the GBP and Euro for the first time since October 2016. Although Fed hawkishness could continue its volatility, Bitcoin's strength relative to foreign currencies is an encouraging sign. And it seems like Bitcoin is less volatile than even the world's reserve currency these days. The supercharged dollar just saw its steepest drop in over 2 years as rumors swirl about China's reopening. Should China ease its zero-COVID policies, its economy and energy demand would see a sharp rebound. Even if China does get back to business as usual can be these days here in the West, we might be headed for a rail strike by Thanksgiving that could cripple US supply chains and push the economy over the edge. A strike just ahead of Thanksgiving and the beginning of the busiest shipping season for retailers could derail the main artery of the U.S. economy. Dara Sarani, chief economist at Towson University's Regional Economic Studies Institute and railroad economics expert, told Fortune. It could even provide kindling to the smoldering fire of the U.S. recession many economists predict is on the way. A nationwide strike and rail disruption would cripple the U.S. economy's ability to move around goods quickly and efficiently. Railroads account for 40% of all long-distance freight volume in the US, more than any other transportation mode. Without them, it would take 99 million additional trucks traveling on public roadways and 4 times as much fuel to move the same amount of freight, according to the AAR. Impeccable timing, right, with the diesel shortage? A classic when it rains it pours scenario. But it's also darkest before dawn. How much more darkness is there to come, and for how long? Let me know what you think in the comments below. Either way, hopefully not speaking too soon here, but these past few weeks of Bitcoin price behaving independent of stocks and fiat currencies is extremely bullish. And we have yet another Bitcoin bullish signal as whales with 1,000 to 10,000 Bitcoin have been accumulating. And the minnows and krill of the ocean world are turning to crypto. In bankrupt Lebanon, locals mine Bitcoin and buy groceries with Tether, as $1 is now worth 15 cents. And other countries that have experienced limitations in the global financial system are also turning to crypto. Crypto exchange Binance helped Iranian firms trade $8 billion despite sanctions. Also recognizing the trend and getting ahead of the curve this week, 7 startups joined Mastercard program to make cryptocurrency more accessible. Through the Mastercard Start Path Global Startup Engagement Program, we work with digital asset, blockchain, and cryptocurrency-based companies that share a vision to make blockchain technology and digital assets more accessible. And as more countries and people turn away from the US dollar, like we've been discussing for the past month or so, the US will have a harder time forcing everyone to use its central bank digital currency. Cool. Alright, before wrapping up with more bullish news stories from the week, a quick reminder about NordVPN. As a crypto investor, using a VPN is an easy, effective, and important way we can further protect ourselves and our investments. VPN, or virtual private networks, prevent people, companies, and software apps from watching and tracking your online activity, which as a crypto investor can protect you when you're connected to public networks, as some hackers have ways to steal your data when connected to public networks. My personal favorite VPN provider is NordVPN. And if you use the link in the description area below, NordVPN is offering us their 2-year plan at a 70% discount, with 1 month completely free so you can try it out. This works out to be about $3.70 per month, the price of a cup of coffee, or probably less than that after inflation at this point, with the benefits of protecting your privacy and your crypto investments. It's extremely easy to set up and very user-friendly, which is great whether you are a new or experienced person in technology. You can pay for NordVPN services in both fiat or cryptocurrency, so be sure to scroll down to the description area below to redeem their offer. Sweet. Now, nearly 50% of Gen Z and millennials want crypto investments in their 401ks. They are questioning traditional approaches to both work and retirement, Catherine Galladay, head of Schwab Workplace Financial Services, said in a press release. The 401k, while still their primary retirement savings tool, is no longer viewed as their only path to retirement, and financial institutions are looking to supply that new demand, as 401k plans now let workers put retirement money into cryptocurrency. Though employers and regulators remain cautious, some plans are beginning to offer the option. Nice. And a major player in the traditional finance world continues to make big strides into the crypto space. Fidelity, for us all, now offering 401k investors access to cryptocurrency. And Fidelity Investments is launching commission-free retail crypto trading for Bitcoin and Ether. Fidelity Investments, one of the world's largest brokerage firms with $9.9 trillion in assets under administration, is launching Fidelity Crypto, a service that allows retail investors to trade Bitcoin and Ether commission-free. A meaningful portion of Fidelity customers are already interested in and own crypto, the firm said. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So, are you bullish on crypto despite these dark times? What do you think the last 2 months of this year have in store for us? Have you been DCAing into crypto during this bear market? Let me know in the comments below. Be safe out there.